Hello everyone, welcome back to another Conquer FX YouTube video. Today we're going to do something a little bit different, to our usual videos. The other day I put up a question box on my Instagram story and just got a few questions from you guys, and we're going to kind of do a Q&A style where we're going to look at the questions that were asked and just kind of break them down bit by bit. In as much detail as possible. Some won't need as much detail to answer, but I'm going to try and provide as much value to these questions as I can off the top of my head. I promise 2 YouTube videos a week as a minimum for the rest of the year, and I don't have as much time today where I usually post the kind of second video of the week. So I said, right, we'll take these questions. I'll do just a quick kind of talking over and explaining these questions in a quick presentation, and let's just get straight to it. I'm not going to waste any more of your time. So basically what I have is just kind of screenshots here, and we're going to break them down bit by bit. Okay, so what session do you read? Where do you live? Well, I actually am from the Republic of Ireland. If you haven't noticed from my accent already, I know people point out my accent straight away when they're listening to the videos. I think it's quite hard to miss personally. But when it comes to trading related, what sessions do you read? So personally, I trade the London and New York session. In the London session, I'm usually focused around 2 to 3 hours only, 2 to 3 particular hours to be specific. And then with the New York session, I'm looking at a 3 hour to 4 hour period there as well. Really in New York specifically, there is the market open itself that I'm focused around within the kind of first 2 15-minute candles, how they present themselves, how the previous hourly candle has been, or where it is positioned in the market currently, depending on if it's at the high or low of the day. A lot of you may know that I do trade from the higher low of the day, and I look at sessions themselves as highs and lows of the sessions as well, to look for key areas of reversals. I use the sessions as almost as to help me basically come up with a story of where the market is going next compared to how the daily candle has opened, how Asia has actually positioned itself as well. So a lot of the times, people will be looking for these core trending days where we have the market creating plenty of like this just simple trending markets with plenty of lower highs and lower lows. Well, actually we can create metrics where we're looking at Asia and how Asia opened up compared to the previous daily's high, what it did up here, to be able to try spot trending opportunities in London and then get another entry in New York. Or if you just want to trade one particular session or market open, you can still use these metrics here. Very, very good for timing, very, very good for positioning yourself and shifting those odds a little bit more in your favor to find the correct move of the day. How many strategies did you learn? So, across my trading career, I say I've tried nearly everything. I've looked into everything. I've tried a little bit of kind of algorithmic trading, you could say, and, I wasn't a big fan of that. I was swing trading really at the start of my career, really focused on the kind of longer term style where I was holding my trades anywhere from 1 week to 2 weeks, minimum really of 3 to 4 days. And that's where I got, that's where I basically started my trading journey overall. I gradually then started designing more systems, and there was a point where I was kind of focusing around 4 to 5 systems, very, very focused on the data collection process. Now when we talk about 4 to 5 systems, yes, they were across different trading styles, yes, they were across different time frames. But a lot of them had the same kind of core foundations beneath them, just with slight changes depending on time, positioning of the market, and any fundamentals, or the market phase was a very, very important part of it, which I think there's a few questions about this later on, which we'll discuss, because a lot of people, they will have a great run and they will say, I'm 3 months profitable. I would argue that you need a lot more data behind you to say that, you are a profitable trader. Because unfortunately, what happens, and I've seen this with plenty of students before, is that a lot of people will go into the markets, they will develop this strategy and they'll put plenty of work into it, which is great. They'll have their first 2-3 profitable months, and then all of a sudden they'll give all those profits away, in the 4th, 5th month. And a lot of the time, okay, yes, it could be linked to over-risking, but if it's not, there's a much, much bigger problem here. One that's actually easy to solve, but it's hard to actually find it in the first place. And that's knowing where your strategy performs. If your trades, perform best in a trending market, let's say, like for example, this SMC trend, or just supply and demand. Let's just keep things simple here. Supply and demand strategies, where we're looking at demand levels here. Really, when we're looking at market phases, these type of trading strategies are going to perform best in market phases that are trending, and the market nature of those, of that particular phase has aggressive and deep pullbacks. We're not going to be able to trade a strategy that works in the trending market like this with aggressive pullbacks the same way as we're going to be able to trade a ranging market, okay? You're going to find yourself getting plenty of fake outs and highs and lows being taken out and you being on the wrong side before coming back against you. So it's very, very important to know, well, where does my strategy actually perform at its best? And we're going to talk a little bit more about that in detail at the later in this video. How did I find trading? So I've no traders particularly in my family at all, or really any people that come from a financial background. But I was, young teenager. Basically, I remember my dad, there was a documentary, on the telly about, these day traders. I can't even remember the documentary that it was. But I saw them, making hundreds of thousands in a single day. Very, very high frequency trading. And I was just hooked from there. The curiosity got to me. I was always, building businesses, making money for myself. I obviously had jobs along the way as well, but I always had that side income from something that I was trying to build. I was building a software company at one stage to help entrepreneurs raise seed investment and cut down the time that it took to actually do that and connect with other people. And there was some different legal issues with that, but that was kind of hard to break through. And then, kind of trading just took over then, really, as I, grew my network a bit better, as I kind of fell in love with the process, to be honest, which is completely underestimated. A lot of people, they don't fall in love with the process, and, they fall in love with the money, and really that's not sustainable. You need to fall in love with the process of becoming excited when you have new findings, and then you have to collect the data to prove yourself right or wrong. But also then having the courage to go out and test those ideas is a big factor as well. A lot of people don't want to go out and test them because they have this thing, well, what if it's wrong? Well, I would say, well, if you've proved yourself wrong, and if you proved yourself that, okay, this idea doesn't work, well, now if you see this idea presenting itself, you know that it's going to fail X amount of times. You can use it the opposite way now as well, to the way you were originally thinking. So, trading, once again, is thinking outside the box. Do you think professional fighters can be a trader? Yes, of course, 100%. Can you follow a plan? Can you be disciplined? If you can stick to a diet plan, you can stick to weight loss, you can stick to turning up for trading or training every single day. Why can't you be a trader? It's down to where you're going to assign the most time to, obviously, at the end of the day, which will ultimately determine how quick you reach success in any game and how committed you are to that. But yeah, why can't you? Why can't anyone be a trader? Why can't the laborer or the person who takes our bins out? There's this, it's the positive and negative thing about trading is that anybody can start. It doesn't mean that everybody should, but anybody can start. But really, I don't care what anyone says. There's two main things to succeed in this game. It is you get capital and you get a mentor. If you don't have capital now, you spend this year building capital. Get 10, 20,000 behind your back. You will thank yourself. Spend, 3, 4K, 5K, whatever on a real proper mentor that's going to accelerate your trading career. Why are you learning off YouTube all the time and then, you're not finding any success, and you think all of a sudden you're going to find this magic YouTube video that's going to help you succeed, and one day when you find this YouTube video, then you'll be a consistent, profitable trader? No, that's bullshit. We all know it, and you know it deep down as well. That's that. If there is a breakout happened in the past, can it be support or resistance? Well, I would say look at your charts. This is the thing. Like, you're asking these questions here, okay? And this is the whole point of the Q&A, of course. But you just the information's right in front of you. If there is a breakout happened in the past, can it be can it be the support or resistance? Well, what a breakout of what? A breakout of a high or a low? A breakout of a consolidation? Like, okay, we've seen highs and lows becoming, this technically here is the breakout. Then this is the retest before moving up higher. So yes, of course. But sometimes, a lot of the time people aren't really actually ready for a mentor because they're not taking the initiative to actually just go and look in the market and say, okay, well, first of all, how do I identify a breakout? Like, get very, very precise. What exactly is a breakout? Because we can have breakouts where the market is moving really, quickly like this, and then all of a sudden we have a consolidation and it gets very tight and the market breaks up here and your target could be all the way up here. This is also a breakout, but this here is a breakout. There's a breakout here when we create equal lows, and then we break through them. That's also a breakout. So you need to become very, very precise on what you call a breakout. Just the exact same way you need to become very, very precise about how you look at higher highs and higher lows. A lot of people are focusing on this inner structure and higher highs and higher lows when all of this is noise. If you actually simply just took these points here and you're trading, let's just say, a trending strategy overall, your points of interest that you want to trade off is going to become a lot more accurate. Your routine as a trader and stuff outside of trading that affect trading. Well, I believe everything outside of trading actually affects your trading performance. It doesn't matter if you're having an argument with your spouse. It doesn't matter if you've shit going on in your personal life. Even coming down to willpower. If you had a particular day, let's just take a student. Let's just say I have a medical student who's actually in my mentorship, and the one thing I would say to him if he's listening now is that it takes a lot of willpower. And the thing about willpower is it's like a muscle. It can be very, very strong. And if you're able to control your willpower to do something, it can have a very, very strong outcome. But the problem is it needs rest. And, just like your muscles, you can just do just as much reps until you eventually fail and, your reps start to become, or each set starts to become, worse and worse and worse, and you get sloppy with your form. Willpower is exactly that when it comes to decision making. 1 to 2 decisions a day. But if you start your day off with decisions that, have a lot of thinking power, the more willpower we use, the less thinking power we have. And if you're starting your day off with, an activity that takes a lot of thinking, a lot of mental power, and then you're coming to your desk and you're trying to trade later that day, ultimately the decisions you're going to make are probably not up there with, your true potential. If you can actually build your routine that your trading decisions are made early in the day, let that be that before you go to work, you're actually planning your day out. So if you're trading New York session, well, you're already marking out your levels, in the day with a clear mind, when willpower is fully charged. And that's very important. But my routine as a trader is fairly simple, I believe in simplicity. It's really the same stuff every single day. It's get up, I'm at the office, 6:30 in the morning. I'm there 30 minutes before the session. Majority of the time, the night before, I'll have all my levels marked up. I have an A4 sheet of paper in front of me every single day with levels that I'm looking at, news that I should have, that I should have in mind that's coming up for the day, any key fundamental drivers that are really driving the market, even if that is linked to hope, fear and greed. Also, I'll just have a quick look at sentiment. Is there any sentiment in general that's, really shifting in the over 70% level? Anything below that I don't really care about, but I find that in my own trading particularly, If we focus on sentiment that is, 70% and over, it usually has a very, strong confluence to trade against that. So if 80% of traders are long, it's a pretty good indicator that for the day, especially like I said earlier on, if Asia has shown us that we could have a potential trending day, well, that could actually show us a really nice move to the downside for that particular day. I don't have breakfast. I have a coffee in the morning, and I arrive to my desk, do what I have to do. London, I'll trade London, update members, do everything else that I have outside of trading, and with other clients that are not in your view, let's just say, and everything else that we have to do to make sure that this trading business runs well. And then, around 10 a.m. then, once I'm kind of finished with the London session a little bit, 10, 11 o'clock, I'll go to the gym. I'll be back for New York, get that done. And throughout the day, then there's plenty to be done as well. Outside of what you see here on the Conquer FX page and in the mentorship. And, other admin stuff. And then really, towards the end of the day, daily report card, really looking at any improvements that I can make. Once again, looking over the movement from today and planning out what we can look for tomorrow. Did anything change with my original bias? Did my bias actually come true? And, really keeping things simple. And then usually when I get home then, get some food into me and, I'll usually go for a walk or something. And that's usually, I'll listen to some sort of podcast that is not linked to trading overall. There's always plenty of stuff to be done. That's a very summarized version, but, I keep things simple, very, very simple. And, I think that's the way everyone should, because I think if your life is chaotic, so will your results be, that your everyday life will, if that's chaotic, it will reflect in your own results. That's why I always say when we see all these traders online and they're, popping bottles in the club and all these women and doing drugs and everything else. I kind of laugh at that because I know when they go in on Monday morning that their chaotic lifestyle is going to result in a pretty roller coaster performance when you look at their equity curve. So let's have a look here. Anthony says every strategy has good and bad periods, so two opposite systems could improve. Would you trade different strategies at the same time to lower your max drawdown? For me personally, no. This is something, like I said at the very start of this video, I used to do. I used to have different systems and strategies that if I was in that worked very well in the trending market will perform very well. And then the minute we started going into some sort of consolidation phase or larger ranging phase, I could pull out the other systems. And if we were in more of a tighter range market, I could pull out the scalping systems and things like that. And what I found was that, when you try to spread your focus over so many things, you really spread it, very, very thin, and you can only assign so much focus, willpower, and everything else to so many strategies. Trying to keep up to date with actually having those strategies perform at their highest potential, and me as a trader to perform at the highest potential, is very, very hard. Trying to conduct daily, weekly reviews on that, finding problems, adding solutions, working on myself. It's very, very hard to keep up with that. And this is something I see with a lot of traders who are coming into the space and they think they've designed these amazing expert advisors and algorithms and things like that, and I'm just waiting for the day where it stops working. Because the reality is, when a lot of people will come in and they'll design all these algorithms and they'll have one buying, one selling, one trading ranges, one trading trending markets, one trading breakouts, and the reality is that they will fail because you can't keep up to date with how the markets are changing, how you need to slightly adapt every now and then depending on your strategy. So for me personally, as I used to do that, yes, it worked, but it was completely draining, far too much time spent on optimizing rather than focusing on me, how I'm performing, my mental edge, which is more important. And also when I doubled down on one thing and design something where I've said, okay, this is it. I'm going to find the golden nugget in this strategy and nothing else. My performance, honestly, it went through the roof. And that's my advice for everyone here. Focus. If you can't even just focus on one pair, one strategy, one playbook, that's how you're going to do it. The top payers in the world, or the top salaries in the world, those individuals are specializing in one thing. That's why they're the best at what they do. They assign all their focus to one thing. And as humans, we think we're really, really good at multitasking, but we're not. We're not designed to multitask at all. And that comes back to willpower, decision making. When we assign so much focus and try to spread our focus across multiple things, it just doesn't work. And the majority of people, like, let's be real, the majority of the people don't do the necessary work to design one strategy. And this opens up this idea then, oh, well, my strategy is failing, I should probably move over to the second one. But then I would say to them, well, why are you saying probably? Why don't you know when you need to pull this strategy out compared to this one? And even designing those metrics can be very, very difficult, because finding when your strategy performs best depending on the market phase, you need to have very precise metrics that you're actually seeing that you're in the market phase before the market phase is even over. There's different ways of doing that, but it can be quite difficult. So yeah, my answer to that would be, yes, I've seen plenty of traders that do this and still do this, and they find great success in it, really, really great traders. But for me personally, no, I'm done with those days. I will do a little bit of swing trading now, if I see some kind of longer term opportunities. But still, the stuff I'm looking at, depending on the entries and everything else, is still quite linked to the confluences and confirmations and everything else that I would have for my day strategy that I use on a day-to-day basis. Okay, so let's have a look. Okay, so this here is actually an important question. How to overcome greed of holding a trade more and wishing it to come back in favor. So for anyone that doesn't understand, let's just take the market comes down to support, that market breaks, your stop loss is down here, it keeps coming down. Oh, I'm going to move my stop loss and keep moving it, hoping that it's going to come back. Now, in reality, I see here, you're saying that, how to overcome greed of holding a Apologies, we had a little bit of a technical difficulty there, but like you're saying here, you're saying the problem is greed. The problem is not greed here. This is the problem here. When it comes to psychology and all these kind of words that we throw around of fear, FOMO, greed, they're all pretty linked to the same problems. Like, you've two problems here. How to overcome greed of holding a trade. It's not greed. The first problem is that, and I'll write it down here so you can see it clearly. 1 second. The first problem is that you actually have an expectancy. So you actually, you expect, the market to turn around. So the only reason, why else would you hold a trade that is clearly telling you that we've broken support and we're actually, your trade idea is wrong? Why else would you hold this trade if you didn't, if you didn't think that you were right? You're holding this trade because you think you're right. You think that the market is going to reverse here, or you have such a strong conviction that you're right. You're saying that all these confluences are in play. We're in an uptrend. Sure, I have to be right. And that's the problem. You have an expectancy. You believe in the outcome rather than actually focusing on the process. So the first thing you need to do is remove all expectations. Okay. You have to remove all expectations. You need to start focusing more on process, and that's designing plans and systems that allow you to eliminate all decision making from an emotional point of view, and rather focus on decision making that is driven systematically. So if X plus Y equals this. So in other words, if the market comes down and we hit this support, if it breaks down larger than 1 ATR, if it breaks down and then creates a retest and then breaks down again, I'll get out of that trade. That is more a mechanical, systematical way that you can, actually create a plan, which removes the expectations, and now you're focusing more on the process. If it does this, I'll do this. If it does that, I'll do this. Your problem is not greed. Your problem is you have a fixed expectancy. You expect something from the market, but it's also you don't know what to do next. It's often the same thing that I find when people say, I have this problem with patience. no, you don't. Nobody has a problem with patience. Okay, you want things to go quickly. Okay, you want things to be quicker. But really, when you say I have a problem with patience, it's actually really, really stupid. This is the problem. You need to look deeper and deeper and deeper into what that means. Usually, the problem that you see first, or what you think the problem is at first, is not really the underlying problem that's really triggering it. Patience is actually linked to not knowing what action you need to take next. Because if you think about it, people say that this is patience. Market comes down, I break up, hits this area of support. This is going to be my target up here, and I'm going to target all the way up here. The market then comes up to here and then drops kind of like this and here and kind of consolidates around this area. It does nothing for about 3 hours. Your impatient ass gets annoyed, and then you exit the trade right here, only to see the market actually goes past your target, nearly double the amount that you originally planned for. Then you turn around and say to me, oh, I lack patience. No, this decision that you made here is not a lack of patience. It's a lack of knowing what to do next. It's a lack of self-control to be better at boredom over everyone else. Patience is, people who have mastered patience know what action they need to take next, and they know when they need to take that particular action. So focus rather on having a consistent process that allows you to know when you need to do X and when you need to do Y to give you Z or whatever. And this is the problem. You do not have a problem with greed. You expect things from the market, and then the market will humble you for having that expectancy, and you don't know what action you need to take next. How do you consolidate trading knowledge or hypothesis into systematic successful rules? Now, this is a brilliant question. This is what I'm talking about when we're saying you need to ask questions. If you ask the wrong questions, you're going to get the wrong answers. If you ask okay questions, you're going to get pretty average answers. If you ask powerful questions, you could get answers that are potentially life-changing. How do you consolidate trading or hypothesis into systematic successful rules? Okay, first of all, you need to break this down. You need to realize that when you look at a system in general, it's going to have all of these moving parts, okay? Or let's describe it this way. It's going to have, let's just say for this example, 3 core parts. But if one of these core parts aren't part of the entire system, it's not going to work. So it's these, when we bring all of these pillars together, this here is what ultimately makes the system. Now, I believe that it really comes down to about 7 or 8 pillars, which I usually talk about. But, we can even see it like a jigsaw. If you look at like a jigsaw, if you have the missing piece, the picture is not complete. You can look at systems like an image and a pixel. So, you have all of these, or let me just describe it like this. You have all of these boxes. Okay, and then within here we have plenty more, and here and here and here, and let's just say this keeps going down, okay, and etc, etc. Okay, imagine this is a whole, this is just one pixel here, and this is the entire image. Well, this part here is just one part that needs to be optimized to create an entire system. Okay, so if we didn't have this pixel of the entire image, it wouldn't be complete. It's the same with a piece of code. If one part of the code is wrong, overall the code is going to fail or not even work in the first place. Okay, so we need to break it down into its tiny little pieces, and usually this comes down to these core. If we want to really just look at it at its basics, because all of these basics, core principles or core pillars, have then categories that will branch off of each one. It's entry, it's exit. It's risk management, it's price, and this is in no particular order. It's price positioning, it's time, it's market phase, So we've entry, we've exit, we've risk management, we have price positioning, time, market phase, we've then trade management. And they are the core 7 principles. You could add in then, if you want to, kind of look at maybe fundamentals as well and add some sort of kind of rules to that. But really, when we look at systems overall, we need to do this. So the best way to actually consolidate your current knowledge and build a system is in order to, first of all, break these down into categories. what everyone's trying to do is they're trying to actually manage and digest all this information too much to the point that it becomes overwhelming, to the point where they're actually becoming completely paralyzed in their approach to take any action in the first place. But let's just say we break this down. You know, when we look at this entry, well, what do you know? So if you're trying to design a system, trading knowledge, from your current trading knowledge, what do you know? What ideas do you think will create a powerful strategy? Now, at first, you don't need to know what's the correct way to do this. Unfortunately, when it comes to designing systems, when it comes to data collection in general, it's not a pretty process. It's not very easy to just turn around and say, this is the blueprint to actually building systems. Usually what it is, it's this, okay? And let me write this out. It's, first of all, having the courage, or no, first of all, it would be being curious. Okay, being curious, testing the idea. So, you know, or sorry, becoming self-aware. So seeing something in your charts and saying to yourself, I've seen this, okay? Or something in your trading knowledge like this, where you've learned something, you understand that maybe the market does this particular thing at a particular time, and you become curious about this, and you say, well, I want to test this. In your testings, you're going to see that, okay, maybe this failed and it's not performing to the highest potential. So then you start peeling that idea apart until you find where its sweet spot is. So for example, let me just show you this. This is the best way I can explain this. Recently, over Christmas, we done a slight little data collection with our members. And one of the things we were looking at was, because we trade from the high and low of the day, okay, let's just say the market's like this, here, and here. What we did was we were looking at particular sessions and we were saying, well, is there anything linked to time in general? So if we stack our confluences and say, well, if the price is at the high of the day at a particular market open, will there be some sort of a reversal, or what's the probability of that market completely reversing? What's the probability depending on the price delivery of how we actually shoot into that high or low? So we first started off with saying, well, let's just take the market open, for example. Let's just take New York open and test, you know, reversals and probability of it actually just reversing straight up on price. It came up around 50-50, okay? And then when we started peeling that idea apart, we said, okay, well, let's take it from the high and low of the day. Well, then we saw an increase. The data became a lot more concrete to the point where we said, oh, now we can actually start working with this. Then we said to ourselves, what if we add in this extra piece to the data, which is a big part of our plan, and say that we'll only trade it if it does this one particular thing at the high or low of the day. And then the data became even more concrete to the point where it was at 70% almost. And it's these sort of little ideas that we come up with your hypothesis and understanding from your own experience that will actually help you formulate these systems. But everything has to be tested. So if you have, you know, how do you consolidate trading knowledge? If you have trading knowledge, particularly on your entry, you have to break it down to each part. Well, come up with the ideas that you have, take your hypothesis, test them, prove them to yourself, and if it's holding concrete and weight, well then ultimately you're going to be able to find something that you can work with. But what I will also say to you is, the easiest way to do this is to simply just take ideas. If you have a strategy, and let's just keep this really, really simple, okay? Let's just say you have a strategy that is buying off support, selling at resistance. Well, I would say, okay, and this is just for the sake of this example, write out all of the rules for this plan according to these 7 pillars that I just wrote down here. Write yourself out a basic plan without any data, without any background of if it actually works or not. Go to your chart, sit down, get a cup of coffee, and spend about an hour or two looking for setups that meet this exact criteria that you've come up with, okay, off your first, you know, blueprint. From there, you can actually build off. So once you have 100 setups, let's say, you know, basically drawn out in your chart, or you can have 100 setups spotted, you can actually go over that then and start seeing, well, what rules can I put in place to systemize this whole approach, that when X happens, I'll do Y, and when Y happens, I'll do Z, or whatever it is. That's the best way you can do it. Visually see it, design the systems visually, and then break it down and optimize each piece of that carefully, going from your entry to your exit, to your risk management, price positioning, time, market phase, and trade management. So I hope that makes sense. So that's, a great way to start anyway. How do I know if my strategy has stopped working? Once again, this links back to data. What does your data tell you? This also comes down to a confidence thing with people during drawdown. You could have an equity curve like this, and then all of a sudden your equity curve is down here. People say, I'm not too sure if my strategy is working. I think I'm on tilt, but overall I've been following the plan. What am I doing wrong? I'll say to them straight away, let's see your 3, 2, 5 years of data. What was your worst drawdown levels? And 9 times out of 10, they can't answer that, okay? And the problem is that, of course, you're going to start thinking that this system isn't working if you've never understood what sort of downside potential it has. What sort of drawdown, negative months can you expect? Let's just say this is 10% drawdown here, but your max over 5 years was 15. Technically, there's still nothing wrong with your system. Technically, if we're looking at the basic side of this. So that's what I would say to you. Understand your stats. What should you expect? Does your actual system perform? What's its worst drawdown? Will you suffer more drawdown than other systems, but have more upside potential? Like, all of this is important to understand. At the end of the day, we're here to make money. At the end of the day, we're trying to execute with confidence. So focus on the things that will help you have more confidence to execute with more confidence, and then obviously make more money. And that first thing is collecting data. Next question, and this is the funny one. Opinions on ICT and SMC. I could go into a big rant about this, but I'm not going to bother at all. I think you could look, you can make money off SMC. No one's ever said that you can make money from SMC, but there's a lot of red flags when it comes to ICT as a mentor. I don't care what anyone says. I've been, in this game, and I've worked with enough people now that are really top class traders, trading at real, big firms with, more experience than any of these SMC traders, who will laugh at this stuff. Keep things simple. All of this bullshit we see is just remarketed stuff over and over again. And that's all I'm going to say about it. If you can make money, that's all that matters. If someone, at the end of the day, if someone has to, convince me so much that SMC is the holy grail, SMC is the shit, man, like, this is it. Why are you convincing me? Just go make money. And then the other thing you have to say is, actually, do you know what? No, we're just not even going to talk about this subject. I think it's pretty obvious what my opinion is on ICT. SMC, if you can make money, well done. I couldn't care less. This game is just about making money, but just treat it like a business. That's all I would say. Should I use a stop loss? Because it seems like market makers know where they are. Yes, use a stop loss. At the end of the day, most people aren't even trading a €1,000 account. They don't care about the 0.001 lot size. And, majority of you actually, your trades aren't really getting executed on the actual market itself. So, you're completely irrelevant in the market's point of view and the market maker's point of view. Why don't you show your face when you go to podcasts? I don't do podcasts. I don't network with anyone. I have a few people that I like to network with, that I've become closer with over the years, that I know is legit. I think majority of the stuff online is complete bullshit, and that's really it. I'm a private guy. I have a business to run. Social media is simply just to try and kind of be a refreshing face and provide real truths about trading for me. And it's pretty simple like that. The better you get at trading, the more money you make. I feel like the less people, you just want to stay private. Sometimes price moves 60 to 70% in my direction and reverses the hit stop loss. Well, what I would say to you about this is that, you need to look at your data again. And, are you looking at trying to trade the whole move? This is the problem. We see markets and, they'll provide a range, let's say, and we'll come up, we'll hit resistance, we'll provide a confirmation. And a lot of the time, everyone wants to get the full move. But the reality is you only need, 50, 40%, 60% of that move. If you're seeing this happening over and over again, well, this is your key indicator to take that data and understand that, well, adjustments need to be made. If adjustments need to be made, well, you need to start making them, okay? Your data is telling you, you already have become aware of what is happening. Now you need to understand how often is it happening. If it's happening over and over again, one, you either need to start reducing your take profits or finding your sweet spot, or two, you may actually have to focus more on an aggressive management style of trading. These are two questions that you need to find, and the only way you can find that is through actually going out and testing yourself. Share us your trading method, buddy. No. We couldn't simply do that in just one quick video like this. But overall, guys, that is just the YouTube video for today. Just a few questions that I wanted to answer. Hopefully that provided value for the people who asked the questions and for anyone else that is actually tuning into this YouTube video. If you are enjoying these videos, we've plenty of more on the channel. Please do subscribe to the channel, hit the like button, comment below, and I will catch you in the next one.